August Global Fund Manager survey from the Bank of America found investors were 16% underweight the dollar, the lowest level since 2006. Reuters columnist Mike Dolan says the 20-year high in dollar underweighting by asset managers indicates both wariness of U.S. assets at large and a structural dollar retreat. Vincent Mortier, Chief Investment Officer at Amundi, says the name of the game will be diversifying away from the U.S. and into European and emerging market bonds. U.S. Global Investors Frank Holmes notes that UBS says the dollar is now unattractive. Foreign vendors from Latin America to Asia are asking U.S. importers to settle invoices in euros, pesos, and yuan to avoid U.S. dollar currency swings. China is forcing BHP to receive payment for iron ore in its national currency rather than the U.S. dollar. J.P. Morgan notes that de-dollarization is unfolding in central bank foreign exchange reserves, where the share of USD has fallen to a two-decade low, and in fixed income, where the share of foreign ownership in the US Treasury market has declined over the last 15 years, pointing to reduced reliance on the dollar. De-dollarization is most visible in commodity markets, where a large and growing proportion of energy is being priced in non-dollar denominated contracts. The value of US Treasuries held at the New York Fed on behalf of foreign central banks is $2.78 trillion. That's the lowest since August 2012 and down $130 billion in just 2 months. Meanwhile, the U.S. continues to rack up debt. Central banks now hold more gold than U.S. Treasuries, which hasn't happened since 1996. Nearly 1/5 of all the gold ever mined is now held by central banks. De-dollarization escalating, a U.S. bond market crash, and a continuing rush to the last safe havens standing, gold and silver seems inevitable. Thank you for watching De-dollarization to continue and a U.S. bond market collapse coming.